Hey, everybody. Today I'm joined by David Chang, one of my old friends from PayPal. I'm so happy to have you here.
Hey, good to see you again, Kathy.
Yeah, you too. So I understand that you are a co-founder of TBD Angels. Is that right?
I am with many of the folks that you know.
Wow, that's so cool. And you are now with one of their portfolio companies called Hunt Club. Why don't you tell me a little more about that?
Yeah, I got super lucky. So one of the investments that we had done about a year and a half ago was in Hunt Club. And so Hunt Club is a new type of executive recruiting firm where we place anywhere from director level to C-level folks in marketing, sales, operations, product engineering, kind of you name it. And our big differentiator is unlike other recruiting firms that basically tap into their own closed networks of candidates. We have a group of about 20,000 experts in our network that make warm connections to millions of candidates.
Wow.
And so that's the big differentiator in terms of what we do. And I was lucky enough to join the company about 6 months ago to lead up the expert network. And so it's been a great fit for me.
Amazing. I'm so happy for you. That's so cool. And are you still involved with TBD Angels as an angel investor?
I am, and I think you and I have talked about this in the past, where I sometimes consider myself the accidental entrepreneur, probably even more so the accidental angel investor. And so TBD Angels has been great for me as I've jumped back into a full-time operating role because there's this other group of people, I guess much like the Hunt Club Network idea, there's this other group of people that I co-invest with, and we share the work, we share deals. A lot of the blocking and tackling that you do as an angel investor, since it's a team sport, it's been great for me to be involved in TBD Angels.
Amazing. So let me ask you a question then, a few questions specifically about angel investing. Many people think that we're heading into a recessionary period. And so my first question is, as an angel investor, are you tending to invest in fewer startups?
Yeah, it's been pretty common, not just across TBD Angels, but also most of the individual angels that I speak to, as well as many other groups. In fact, some of the early stage venture as well. In the last year or so, call it maybe sort of mid 2022 to about now, we have found that the overall volume of investing has dropped. And I know this from myself. I've probably done a little fewer deals, but they're smaller in check size. And a lot of it has been just driven by what's happening in the overall economy. Like if you, as an individual, you're looking at your 401k, you're looking at the markets, like you're feeling a little bit of less of the liquidity. And so have pulled back a little bit. And I guess the ironic thing is like right now, here are some of the best companies that are coming out. They're some of the greatest deals. And so I try to remain pretty active on that front because you don't want to miss the boat.
Interesting. So, what are your criteria? Are there certain industries that you're trying to avoid or that you're drawn to, or how does your investment strategy change?
Yeah, this is probably the worst answer that you'll ever get from an angel investor. And so since I don't have a specific thesis that I have to stick to, since I'm not an institutional investor, I don't have to adhere to certain spaces. Most of my angel investment has been done primarily through spaces that I either generally know pretty well or spaces that I'm generally interested in. Since I don't have that like concrete thesis that I have to stick to, I don't have to stay boxed into any particular industry. And I know myself well enough that I am definitely not smart enough to know like what sectors to bet on. And so for the most part, I think any one of these industries, whether it's great times, bad times, it's a recession, it's a boom, you're going to find winners in almost every industry, unless there's something that's massively structurally wrong with the industry. And so I tend not to bet on specific industries and more just pick teams that work, companies that work, products that are particularly special. And so really focus on like the what the entrepreneur control as opposed to like the broader macro industry.
Well, you mentioned teams. Speaking of teams, um, what are some qualities that you look for in a management team?
Well, they got to be fun, right? Otherwise, you wouldn't be there.
Yep.
In all seriousness, I think a very big thing about a management team is just like the overall caliber of the team. It's really hard to be able to suss out, but being scrappy, being adaptable, looking at what's happening in the market, being able to pivot. And this can happen both with like veteran entrepreneurs and operators that have done it multiple times, as well as very first-time entrepreneurs. And so that overall caliber and ability to like react to the market is really, really important. Another factor is looking for teams that have really complementary and diverse skill sets. And so it's not that it's a non-starter, but it's a little bit of a red flag when you have a management team that all has the same functional background, right?
Mm.
Like it can be done, but it leaves themselves open to some pretty like blind sides. And then probably the third thing to look for a management team is that collectively, do they really fit with the space? Like we talk about like founder problem fit. Like, is it logical that this team is pursuing that particular solution in that particular space? And so the fit with the market is also pretty key in terms of looking for a management team at the early stages.
Market fit. I hear that one a lot. Thank you so much. And so let's say somebody is coming to you and pitching to you.
Mhm.
What are the top questions that you tend to ask founders?
Yeah, in addition to the usual, like wanting to understand like the product, the team, the market, I think some of the questions that I tend to drill in more deeply on are in the earliest stages, because we're talking about a nascent venture, the how do you break through in the first place, like the go-to-market question, like how do you get your first customer? How do you get your first user? Many of these startups are trying to crack a pretty difficult problem. Like how do you get past that cold start issue, right? So that's like the most immediate thing. Like how do you get off this off the starting gate? The second question is probably a little bit more middle term, and so think about it more of like in a year or so, year and a half. I'll typically ask, what is the next really big milestone for the company? And so there's a couple things that are loaded within that. It's trying to get a sense of like what's the risk, what keeps them up at night, what's qualitatively different about the company in about a year, right? And so I'm thinking towards like when they raise the next round, what does that round look like? It's not just doing the same thing, right? They're going to prove something out with that round. And so that's kind of a medium term question. And maybe the last one, if we kind of get to the I think they're going to get off to a good start. I think they're going to make it to the next round and have another series of investors. Is what do they think the very long-term unfair advantage that they have? Right? It's okay to not have it in the beginning, but you want to be able to see once they get to this like certain level of success, it's not going to be a place where suddenly all competitors sort of swarm in and then they're left with nothing differentiated, right? So it's a bet of like what their long-term differentiator is going to be. And so that unfair advantage, even if you ask them in the early days, you get a sense of what they're thinking. And it's, it may change over time, but that's something that's really important for the long-term success for a company.
I love that notion. I don't know if you know or are familiar with Chris Walker of Refine Labs, but
Mm-mm.
his whole motto is, you've got to be creating a competitive differentiation in the market. I love that. So, okay, David, let's say that somebody is coming to pitch to you or anybody else trying to get angel investors, probably heading into a recessionary period. What advice would you give startups who are trying to pitch in this environment?
Yeah. So some of it is a little specific to this particular point in time. It is a little harder to get that check today, and the money is not as free flowing. One thing to keep in mind is that whether it's an institutional investor or angel investor, for that matter, investors need entrepreneurs and operators just as much as they need the investor side, right? And so, like one thing to keep in mind if you're pitching is that it often feels like there's this totally asymmetric relationship where you're just going to investor, sort of, please give me money kind of thing. And then the thing to keep in mind is that, their full-time job is to, especially for an institutional investor, is to invest. And so they need to do their job of finding really good entrepreneurs. So remember, although the power dynamic feels a little shifted, it is something to keep in mind. And so that might be a little unique to the time period right now. And so we're going to get out of this recession. Things are going to turn around. Early stage venture will continue to thrive. And I think my main bit of advice when it comes to startups that are pitching to angel investors is that you want to make sure I guess maybe to do three things. And this is something that I've often thought about, and I've made some mistakes in this. And so there's a little bit of a playbook, but the three things are: one, you want to aim at a really tight target of investor. And so be pretty selective. Like, look for investors that understand your space, look for investors that write the check size that you're looking for, right? And so not too big, not too small. And so be pretty strategic about like aiming for that. The second one is breaking down the barriers between you and ultimately the believer in your long-term success. And so sometimes people call this socialization. It's almost like raise before you actually raise. And it's the, when you want money, ask for advice. When you want advice, ask for money. And it's like super trite, but there's some powerful psychology in that. And so you want to like socialize your venture before you actually go for like the big raise. And then when you have enough data points, the third thing is that you really want to create FOMO when it comes to the investor side. And so it's not deceptive FOMO, but it's momentum. It's like, all right, great. I've got this much to raise. I've got a certain number of people who are part of that round. And as an investor, you want to be part of something great. And so you want to create, as an entrepreneur, you want to create the atmosphere where you're able to raise because you get like a lot of other great folks like part of that round. And so that FOMO piece is actually pretty key in terms of just getting people off the starting block. And so maybe those are the three things that I would suggest that entrepreneurs do when they pitch to angel investors.
And I just follow up on that. How can someone create FOMO though if they don't have any initial investors? Do they need that in order to create the FOMO?
No, it's a great question, because it feels like it's a little bit of a catch-22. Like, how do you actually get that going? So some ways I've seen some people land that first investor is you typically go to people who know you, and so they don't have to be uber wealthy. It could be someone that you used to work with. It could be someone who understands the space. It might be someone who that you don't know particularly well, but like comes highly regarded and they know you, kind of thing. And so getting that very first check, sometimes it's even like a soft commit. And so you can raise without having actually raising, where if someone commits to you, great, I'm in for, let's say, $10,000. I'm just going to make that number up. They don't have to necessarily wire the check, but it's like a soft commit. And so they can commit to you raising. And I very frequently see people break through that FOMO or break through that logjam by creating a series of investors where they're essentially getting soft commits from everyone. And then later on, some big institutional lead will come in and take the rest of the round. And so it's just getting that ball rolling. It's getting the dominoes tipped over. And so even if you have to go to folks that may not be ultimately writing really big checks, but having like that initial vote of confidence gets that ball rolling to get you the next investor. And so that's one way to create that FOMO.
Excellent. Thank you so much, David, for your awesome advice. It's always so great to speak with you.
Yeah, so nice to see you again.
You too.